Good morning, everyone, and welcome to Morning Tea, Episode 3, where we dish all the real estate, food, and travel needs that you need. This morning, we are meeting with the lender, James Brown. How are you today?
Good.
That's so good to hear. So we're just going to jump right into it, guys, and we're going to start asking James some questions that you, the people, want to know. So, James, how did you get started with real estate and being a lender?
So I got started in a business because I initially wanted to invest in property. But at the time, I didn't have any money or I didn't have any knowledge about the business. So I thought that if I jumped into it like in a sales role, I would learn, but also, be able to get into the business and make money while learning and get the experience. So I jumped in and I've been doing this for about 4 years now. Well, I'm in my 4th year now.
Wow, congratulations on that. Of course.
I think we all get started with that mindset.
Yeah.
Figure out lifestyle.
Right.
Definitely, because that's, I think, everybody's end goal. They want to be investing in it. They invest.
Right.
James, what's the current interest rate?
So rates fluctuate, and they're different depending on the borrower. So obviously, a better profile borrower is going to get a better rate than someone whose profile is not the best or is a little bit struggling. But rates for the past 3 to 4 years, 3 years, I would say, has been between 6 and 7. Now we're on a downtrend and it's come down. I can say that they're probably, high 5s to mid 6s, depending on the given file, or it could be a little bit higher if you're doing a non-QM loan. But you're swinging between that 6 and 7 still, more so to the lower side on certain programs.
Okay. So the people also would like to know, what's the difference between a pre-approval and being pre-qualified?
So a pre-approval is more intense as far as document review. We look through everything. So if you're a W-2 employee, we're looking at your W-2 pay stubs, bank statements. We're doing a full review of your file. It's almost like a pre-underwriting that we do. A pre-qualification is almost like you just come, hey, you're curious or you're interested in looking for a home, and we say, hey, we ask you questions like, what do you make, or how much you have saved up, what's your credit score, and then from that we can obviously determine that you would qualify for a certain amount. We haven't really looked at anything or reviewed anything with you, so like word of mouth kind of.
Right.
Yeah. It's like your word against mine, rather than a pre-approval is actual documentation review and like a pre-underwriting.
Okay. So with that question, just a backdoor, in order for people to get started, they do need a pre-approval, not a pre-qualified.
You want to have a pre-approval because you don't want to go out there and shop for a home, and get into the process, find the home of your dreams. It's all beautiful, you love it, your family loves it, and then you get into the loan process and we tell you, we didn't really pull your credit, so now we can't qualify you or we can't approve the loan. It's not gonna be the best.
Okay, understand that, people. You do need your pre-approvals to go out and start home searching.
Right.
So, credit score requirements been changing, right?
Yeah.
Scores are still needed, or what's up with that?
So there was a minimum credit score for conventional loans that has been removed. There is no minimum anymore. It's just gonna depend on your credit profile. So income, assets, what your credit report looks like, and then it'll be approved or not approved based off of that. There is no minimum score to enter on a conventional loan anymore. FHA loans, we go down to 580 scores.
Okay.
So yeah.
Now, in general, is there a credit score you recommend a buyer should aim for when they want to get started?
The better the credit, the better the terms of the loan for you, right? That's just general answer. What credit score you should have? Above the minimum.
Gotcha.
Yeah.
Got it. Enough said.
But people also would like to know, how long will the loan approval take? And then how long will the closing process take?
So from the point where you get a contract, you're fully executed, we try to push things really quickly. So our turnaround on loan approvals can be within 24 hours to 72 hours. Other than that, from that point to closing, it's majority, based on the client and everybody else involved in the transaction, right? Like title has to come in, the appraisal needs to be done. the attorneys obviously have to come to an agreement as when they want to close. But moreover, most times when we get loan approval, there are conditions, right? So we have the homeowners insurance. If there's anything that the underwriter is asking you for, you have to get it to us. The faster the client gets us docs, the faster we submit it back. But if we personally try to get everything up front, but obviously there's unforeseen things that come up. But the basics, we get everything up front, so our loans pretty much close under 30 days.
Could you explain a little bit about QM, the non-QM loans?
All right, so a qualifying mortgage is basically just a mortgage that you have to use your income, assets, and your credit to qualify. So whether you're self-employed or you're W-2, we're gonna review that, and that has to be approved for you to get the mortgage closed or approved. Now, a non-QM, there's many different ways. It's like alternative documents. There's many different ways to approve a client. You can approve a client through bank statements, profit and loss from their accountant. It has to be a certified accountant. You can do a DSCR loan, which is a debt service coverage ratio, where we're using the property's market rents to approve a file and make sure that the market rents are at least equal or above the mortgage payment. Sometimes you can go a little bit under, but that'll change rates for you. There's many different programs out there, but those are the difference. The biggest difference is we're either using, verified assets, verified income, verified, a verified situation to kind of approve you rather than an alternate situation. So like you could have $100,000 in deposits, but that doesn't mean that all the business deposits, right? So, but we're using that to qualify. Hopefully they are, but that's just an alternative way of qualifying.
Got it. And who is the non-QM usually for? Or who you typically see using non-QM?
I typically see people that either, number one, they own businesses and they write off a lot of losses, so they try to get an alternate way to get approved. Or on the DSCR side, just a lot of investors, right? Because there's no debt to income ratio. We're not really looking at much. We only, like I said, if you have the money for the down payment, you have the credit, and you have a house that's at least going to be at the mortgage payment or above, you qualify.
Gotcha. So
it's just that simple.
New or young investors, not small portfolios or no portfolio, right? Would you suggest they go that route?
Well, if you have the money, yeah, because it's not like it's different, right? So most people always promote 3.5% down, 5% down, 10% down. We always say that you don't need 20% down to buy a home, which is true if you're occupying. Right. But if you're buying it to invest, it's different. Those down payments are much higher. We do have a program of 15% down for a DSCR loan, but you have to have a certain price where you can do it.
And since we are talking about travel, food, and real estate, tell us some places that you've been recently. What's been new in your life? What's going on?
I haven't really traveled as much because it's been working, but been to last place I went to was Miami, which was really fun. Okay. And hot during the winter. Then I came back and went to Camelback.
Oh, Camelback.
Hurt myself badly. I fell on my neck everywhere.
This is why I won't
snowboard. But it's fun though. Snowboarding. It's like it's a lot of intensity on like your core, and your legs get weak or like tired after a while. But I like it.
I'm more of a Miami girl.
Miami is definitely more
just
fun.
In Miami.
And less it is.
Just in Miami.
Miami's fun. I went for a 5K. Went to run 5K with Gunna and whoever else was there, and then we went to his concert.
Wow. I didn't know Gunna was so into fitness now. It's crazy. Yeah. Did you eat any good food when you was out there?
Miami?
Yeah.
What was the best dish you had?
Or the best restaurant?
Y'all know I'm fat.
Yeah. Miami. The best food. I had a couple different restaurants, but we were like on the go because it was quick. It was like literally like 3 days, and like the third day was us coming back. But off the top of my head, I had lamb chops from Kiki. Yeah, that was good.
He's a busy guy. I think I called you.
Yeah. No, that was really good. It was like sweet taste to it. I think it was like a truffle kind of. A truffle chop or something like that. Yeah, but it was cool though.
Yeah, we just we just closed a successful deal. Shirley, New York. Buyers originally from Brooklyn. So, how many people do you see moving out the city to Long Island?
A lot of people moving out. Most people are moving out for either the school districts or space. But the island's getting a lot more popular. The barriers to entry are not as high as people make it seem. Also, they're a lot different from the city because, you know, for you to get a sizable home like Long Island with the space or bedroom size, or just how you like it, might be way more expensive in the city as you're more closer to the convenience of Manhattan or whatever, or the city life. But the taxes are higher in Long Island, so it kind of balances out. But people are moving out there a lot. Yeah.
Last question, James. What do you say you provide to the people that's different than the other loan officers?
Tell them why you're great. Tell them why you're great.
Service, honestly, service is key. There's a lot of things that we provide, but the two most important things to me personally when it comes to clients, I'm client focused, so it's the service and the trust, right? Like if I tell you I'm gonna do it or get a deal done, I'm gonna get it done. Like I might say, you know, this deal's kind of tight, or it's a little shaky. We're gonna have a lot of moving parts, you know, but you know, it's not gonna be the best or the easiest. As far as, you know, things that I may need from you, or it might not be. It's gonna be smooth on your end, but it's gonna require a lot for us to get to the finish line. We're gonna get it done by any means necessary, like actually any means necessary.
I can vouch for that.
Yeah, me too.
We was out the country. He called me, like, I need to close. I was like, I got it.
For sure, yeah. So like it's just the trust. Like if I put my name or my hand on something and I say yes to it, then we're doing it. If I say no, you might not like it, but I just hope that you can respect the fact that I'm just telling you I can't do it because I don't want to say yes and then come back and say no.
Yeah, absolutely. I think that trust is a big thing.
Trust is huge. Yeah.
Especially because these people, the clients, they're looking for their dream home. They're scared, they're nervous, they have questions, and I think you giving them that reassurance that they're looking for makes them so much more comfortable. I could say with the clients we did that Shirley deal with, they're like, James was on it. He was calling, he was making sure things were done.
They actually got me a bottle that I got to pick up.
Oh,
I need that drink.
Yeah.
So one we didn't go pick up.
Stop.
Probably.
He told us we had 72 hours. I can tell you right now,
It's
like
gone,
130
yeah.
hours. So.
I know that bottle's good.
Listen, we respect you. We thank you for everything.
Appreciate you guys as well.
Because we're going to continue to be closing out these deals.
Definitely. 2026 is here. It's pretty big. Just getting started.
Absolutely.
We thank you for coming on here.
Yeah.
Thank you for talking to everybody. Yeah, outro.
No, we just thank everybody for tuning in. Make sure you step in for the next episode. We thank you, James. And,
James, how they find you? How can they
Oh,
find
true.
You can find me on Instagram. I'm with James. Or you can call me. Honestly, I put my number up there. If you need to reach out for any reasons, you want to have a question about a mortgage, or you want to refinance, purchase, family, friend, somebody wants to buy a house, don't only reach out to me, reach out to them as well. But we're happy to help you. We're happy to get it done.
Absolutely. All right, guys. To the next episode.